And there you have it. The markets are officially closed on this Wednesday, September 24th. Welcome, investors and traders. I'm AJ Monte. And a big shout out to kick the show off to my older son, Greg. Happy birthday to Greg. We love you very much. Thank you for everything that you do. The Dow is down 171.5 points on the close here. But remember, the Dow is only 30 stocks. There's a lot more going on. And we have some of the heavyweights that we're going to talk about today. And we're also going to talk about some of the home builders. We've got KBH coming out with earnings after the close. We have Tim Lindsay coming up, our resident real estate expert. But first, we have Nod from our NODLive news feed, who gives us all the data each and every minute of the day, nonstop. Nod, what do you have for us this week so far?
Hey, good afternoon, AJ. Thank you so much. And thank you, everybody, for joining us live and on a replay. We do appreciate you taking time out of your busy lives to be with us. Listen, last week was the busy time. We saw the Fed cut rates. This week, it's not so busy. We're low on earnings. We're low on data. But the Fed is out of their quiet window, which means they are talking all about what they did last week. They're abusing a lot of oxygen. So, AJ, like you said, we've got our resident loan expert on, Tim Lindsay. I would love to bring him on the stage to so if he can get after this, because we have a lot of data to talk about. What I wanted to put up is, last week we saw the Fed cut rates for the first time in a bit. They went down to 4 to 4.25. They've now cut 125 basis points since September after one of the most aggressive rate hike schedules. Additionally, America's home ownership rate has fallen for the first time since 2016. So we're seeing a little bit of a lag with high interest rates and what's happening in the world. So I'm really glad Tim is here. Tim, the dog caught the school bus. Now what? I wanted to welcome you first. And I just wanted to say that we're really glad to have you here. We've got a lot of data to go over. Can you look at this new home sales data that came out this morning? I'm going to pull up my screen here. If you look, it jumped 20% month over month. Many are saying that it was a surprise. You and I can say that it was expected because people were kind of on the fence with waiting for this very small 25 basis point rate cut. But with this all being anticipated, we know, Tim, that the Fed does not control the 30-year rate. Can you explain that to people and what you're seeing in your seat and what this did and what it's going to do for you in the future?
Yeah, absolutely. Thanks again for having me on. Good afternoon, everybody. Today was sort of a surprise on new home sales. It was actually the highest we've had since February of 22. So it's been a significant period of time. But I think there was a lot of people thinking interest rates were going to come roaring down last week. In fact, we had phone calls pouring in that way. And so you had a lot of people out there trying to take advantage of those incentives that home builders are still building in, because in my personal opinion, they're in sort of a panic mode when you're watching and looking at the interest rates and how they can move their product, because right now existing homes resales are higher priced than new home sales, which has never happened in history, recorded history anyway. So I would argue that that's from definitely having people kind of front running that on trying to grab that low interest rate, those incentives that they're offering.
Tim, if you look at the 30-year, I have it up on my chart. For those who have the Thinkorswim platform, it's the /ZB, right? Zebra Bravo. And what's interesting is that we have a role reversal resistance that was broken here and now turning support. So the 10-year and the 30-year futures really could care less about what the Fed's doing with regard to lowering rates. And this is going to make for a very interesting conversation moving forward, because the home builders, as you mentioned earlier before the show started, we got KBH coming out with earnings. If they are borrowing money at a cheap rate to go buy or build homes, they're going to be flooding the inventory out there. And who knows what's going to happen? The home builder is going to lose money when they can't sell the homes at the higher price, or they're going to have to take a bath and prices are going to have to come down all the way to get new buyers coming into the market. We don't know. There's a lot of question marks out there. How do you see that?
Yeah, I agree. Actually, Monday morning, I spent about an hour and a half with a builder here in the Denver metro area up on the north side, and she typically doesn't have anything that's already built and sitting and waiting. And she told me she has 22 houses that are completed. So, 22 doesn't sound like a lot, but when you're building from the ground up over 8 or 9 months, having 22 sitting is a problem. And so they still have to move that. It really does look like interest rates don't want to come down. Just like last September when we went up 100 basis points over time with a 50 move, interest rates went back up. We flirted with 4% right as Powell was giving his speech after findings, and interest rates have gone back up. I think the 10-year was pushing 4.15 today. The calls were starting to come in. Where's my quarter point hit? And just so everybody knows that the Fed does not control that. If anything, the bond market's telling the Fed that they were wrong, in my personal opinion.
Right. And the thing is, for the traders out there, if you don't want to be trading the bond market, we talked about this a couple of weeks ago when we're looking at the 20-year Treasury bond ETF, which is ticker symbol TLT. And if you look at this, remember, we just looked at the 30-year bond. We got the same exact thing happening with the role reversal on TLT. And I know a lot of our members are trading this. I had a two-part forecast that we put out last week. We had a downside target that's already hit, and we still have an upside target that still has to hit. And I think we're going to get a hit on both those targets, because if you look back in time, all these diagonal lines I have on the chart are former price targets that we put out to our members every Wednesday during the rapid fire stock analysis. But this one also, and Tim, you're a trader, so we're talking your language here as well, but they also have a very robust selection of options that are not very expensive. So if you are someone in the audience that's looking to trade interest rates as the markets go up and down, this is an instrument that you might want to take a look at for sure. Yeah. Tim, do you have a position in this one, by the way? I guess I could ask you that.
I don't. It's a pretty emotional world for me, having had to watch it for 25 years, and I learned a long time ago to keep emotions out. So
yes.
I typically avoid it a little bit, which is ironic because I kind of have an idea which way interest rates are going. But go ahead, Doc.
I was just saying, so AJ, but before I ask you to look at one of the home builders, DR Horton and the XHB, Tim, I think one of the dichotomies you have is affordability. So if I look at this chart for rent, you see where rent is almost outpacing people's ability. It eats up their entire paycheck. So if they can't afford to rent, the argument is they probably can't afford a house. I know you would probably have something to say about that. So while AJ is chewing on those two tickers, can you just opine on what you see here and what this does for your business?
Yeah, absolutely. So what I see when I see average rents rising is that the cost of the home that they're living in is also rising. Right. And so, we talked about this the last time. Insurances are going up, HOA dues are going up, property taxes are going up, and that rolls over. I think there was some growing belief a few years ago with the general public that, well, corporations won't just eat those costs. Well, they will not eat those costs. And, especially homeowners, when you've got landlords who, you've got large corporations building big apartment buildings, but I work with a lot of real estate agents that actually sell investment homes across the country, and they're single family homes, and those have to roll forward. And so you're seeing those rents that are trying to go up, and so there's a give and take where it's getting too expensive, but people don't want to rent. Well, then I guess it's the parents' basement. You're headed that way. And that kind of ties into the inflation talk again, where I really don't see jobs being as bad of a concern, as much of a concern to the bond market as I do inflation. I have a chart here about goods and inflation I'd like to throw up just real quick. If we're looking over here in this area, our goods inflation continuing to rise, and services which were coming down are also starting to tick up. I think this is what the bond market's really looking at. That's my concern.
Well, this is what we talked about last week when the Fed lowered, again, maybe with a little arm twisting from the White House, as Jerome Powell obviously has some stress there over lowering too fast too soon. But I said, and many other experts are saying, that this is going to open up the door to inflation. And hey, as traders, we don't mind that because the commodity markets are going to explode. I just feel for the end-line consumer and someone who's going out to trying to buy groceries for their families. So those are folks that are going to really wind up getting hurt. Because, Nod, you put out something on the NODLive feed earlier this week that I forget which percentage it was of the higher income earners are driving this market. It's not middle income, and it's not the retirement accounts. What are you seeing out of the NODLive feed?
Well, it's the top 10% of income folks that are driving 50% of consumption. So that type of widening has historically been poor for the economy and has historically led to bad things. I mean, the timing is imperfect, but it's not sustainable as it continues to widen. And with interest rates getting cheaper, and as I'm sure Tim can attest to, that may give some people a false sense of security. You know, AJ, we're seeing trading margin debts at an all-time high, and people are buying it at these levels, and they're borrowing money from their broker to get in now. You know, calling tops and bottoms is very tough, but if people are borrowing money that they don't have now to buy stocks where they are now, that doesn't make me feel good.
Well, Tim, I don't know if you heard this through the VIP chat today, but the FINRA is talking about eliminating a $25,000 day trading requirement. Have you heard that?
No.
Wow. Well, welcome to Las Vegas, folks. The casino is now open, and as they say at the window, good luck, right? Because what that means, for those that don't understand what the day trading requirement was, it was basically preventing people from blowing themselves up, basically, because if you have if you don't have $25,000 in your account, number one, you shouldn't be day trading to begin with.
Right.
And number two, once they eliminate that requirement, you're going to have people digging into their retirement accounts to try to turn, $15,000, $20,000 into $1 million, and they let it ride. And it's really a shame. I think that's one of the worst decisions that the regulators have made. And what that will do, it's going to actually add volatility to the markets as more people try to get in and out intraday. It's going to push things. Now, I hate to cut you off in mid topic here, but if you look at KBH, they're coming out with earnings here, and I'm looking at this red candle. While I'm looking at the chart, maybe you can find out what just happened.
I'm scrolling right now. Yeah.
Because I like looking at this after hours because it really you get to see the manipulation taking place real time. But in this minute right here, right at 4:10. Now, Nod, when did the news actually get published? You're the news guy in the room here, but that print came out at 4:10.
Right. They just posted 3 minutes ago, so we're right there.
Okay. All right, so we're right there. And what did they post? So, and then I'll talk about what's happening here in the after hours. Because
I'm digging through at the moment right now. I'm just there.
See, so we hit a high right here at 410. We hit a low at 411. So you basically had, what is that? That's almost a 5% price swing in a 2-minute period. So going back to the point that I'm making with day traders coming in with money they can't afford to lose, they're going to be coming into a market like this and just getting smushed. Sorry, that's the only way I can explain it. Now, I think that what we're going to see here is probably a rally as the traders start to come in. And the reason I say that, this is live now, we got the CCI down below, oversold and starting to hinge up. So I would not be surprised at all to see the next candle come up over here in the next minute. I wouldn't be surprised to see that turn green. There it is, just turn green. And if it starts going over this 20-minute moving average, you'll probably see a continuation of the high and after-hour markets here. And that's really what you're seeing here live on a 1-minute chart is how you would read a daily chart, a weekly chart, or a monthly chart if you're an investor. And so KB Homes is out. What did they miss, or did they beat, or they come in with?
Well, I mean, the revenue was a miss. The earnings per share was a beat. The diluted earnings per share was down 21%. So and the homes delivered was down 8% year over year. And the average selling price, Tim, which I know you pay attention to, was $475,000, which is less. And their margins dropped to 18% versus 21% year over year. So I think that probably makes a lot of sense.
Now I'm gonna put Tim on the hot seat right now. He did not expect this, and folks, we don't practice the interview here, but I'm gonna put, because I know Tim knows how to read the charts, and I'm gonna draw a picture for him. So if I look at this as a resistance area up here, and I see this rounding bottom, what do you see right there, Tim, in that pattern? What do you see?
Inside I see basically what could be a cup. It's definitely a rounding bottom, which is cool. Go.
That's what I see. I see a cup. And if we get any kind of a pivot here, well, we do have a pivot today, but we'll have to see what happens tomorrow after earnings. But if we get a continued move higher in the price, folks who are learning technical analysis, this would be the formation of the handle in the cup. All right. So again, I'm going to have a question to Tim. If the handle starts to trade up and we start to get it up around 69 and we see the volume start to increase and we get a breakout right here, where would you put the price target on KB Homes if we get a breakout over the $70 level? How would you measure that?
I would measure it from the depth of the cup, which would put us up maybe around 90, which I think is their all-time high.
There you go. So you would have a breakout that would be equivalent to the depth of the cup. See, folks, Tim is not just a real estate expert and mortgage expert. He's a technical analysis expert as well, and I'm glad to have him on the show here because it makes it a lot more fun. Do we have any questions from the audience? I got a commercial on my. Yeah,
we've got a bunch. I mean, Colin's saying he really loves the new format. He wants us to know if we can look at Google, please, Googl, and then we can throw in a Tim.
Yeah, Tim, stay on with us. You want the L or no L? You want
L, please.
All right, we'll get the L in there for Google. All right, now I have a downside target on that one already from a couple of weeks ago down to 230. I think it actually could hit that target, and here's why. If you look at the monthly on this one, look at how vertical that price action is on Google. Where's my price target on the monthly chart? There's my price target. You think that's a reasonable price target? I think it's a reasonable price target because if you're using Fibonacci retracement lines, that's barely at the first 23.6 Fibonacci pullback area. Let's see. Right there, you take the low, go to the high, and there you go. 23.6 Fibonacci is 227.83. I'm coming in a little bit higher than that. So I would not be buying Google. I'm telling you what I would personally do. I would not be buying Google here. But I would certainly consider maybe doing some horizontal calendar put spreads on that one and waiting for a pullback on that one. You got one for Tim?
Let's bring it back to Tim. Now, our good friend Dan Lindemeyer, who's a great longtime member, he's looking at REAX and REAX and RKT, please. So one, they're both realtors and one's a lender. So it's in this space. So
this is REX American. Is that what you're looking at?
REAX.
Oh, REAX. Okay,
yes,
got it.
That's my fault. I'm talking fast.
All right, REAX. All right, there we go. What do you see there, Tim? Just real brokerage ink.
Yeah, I mean, I still see a little bit of a rounding bottom there, and it still looks like it could be forming a cup. I mean, that's a pretty ugly day to day.
Yeah, that's. I see a cup there as well, but I also see this thing dropping like a rock on the daily, and it's heading right for this roll reversal support level. Now, folks, understand something that this is. Nod gave us this ticker symbol. This is a stock that's under $5. And a very important lesson when it comes to margin requirement. When you have a stock like this that was at $5 when it was above the 20-period moving average, the margin requirement increases, it goes up. So in other words, the broker requires that you bring in more money to hold the stock that drops below 5. So now that it's dropping below 5, the investor or trader in this stock has one of two choices to make. They could either bring more money into that broker to finance the margin requirement, or they could sell their stock. What do you think most people are going to do in this market condition? You think they're going to bring in more money to finance a stock that's punishing them on a day like today? They probably will continue to sell it. So that's why if you have cheap stocks like this, you got to watch that $5 mark. Now, the opposite would be true. If it gets back up over 5, they release the margin requirement, and then the traders that are in that, once they get the release of the margin requirement, they tend to put it back into the same stock, and it generally pushes it up. So that's something just to keep in mind, a little educational tidbit that we gave you there.
So go ahead, Tim.
I was just going to say one thought about this too. This is a real estate brokerage. We just got information a few days ago that Compass, which is a massive company, bought the Century 21 basically. And so you've got some consolidation and brokerages out there, just behemoths becoming larger behemoths. And so, that could be part of the reason why that one's down further. But
from what I understand about this company, their growth rate is fairly it's quick. They're
It's
growing
quick.
very rapidly. I'm not going to say that makes them profitable. It doesn't, but they are growing quite rapidly. So this could be very interesting if the market does turn around. You get a cheap stock like this, and all of a sudden you got investors buying into it. Goes from 5 to 10 very quickly, and
Sure.
it's gone up many times. It's gone up 50%. You can see where it's trading at 4, bounce off the moving average, jumped right up there to 6, 6.5. So you got 50, almost 60% rally in the stock in just maybe 2.5 months. And those are opportunities, but you got to be really careful, making sure that you keep your eye on the charts for sure. Yeah.
Well, what about a large scale lender in Rocket, RKT? I know, Tim, they're a little bit of a competitor of yours, but they do things on a very mass scale, and they're not as white glove and personable as you. But how do you think they fare from the chart that you see?
You asking me or Tim?
Either of you guys. You guys are both smarter than I am.
Well, I still have a downside target on Rocket down there around 1648, and we haven't been looking at this one every single month, but it's done a fairly good job keeping the targets hitting. And so when you look at a stock like this, here's another fairly inexpensive stock under $20. When you look at the monthly chart, you could see that overall there's a nice trend on this one. Here, I would absolutely keep this one on my watch list, because not only is this an uptrend, but you actually got a trading channel. Now, it's at the upper end of the channel, no doubt about that. But if it pulls back anywhere near this moving average, I think this one could be right on the launch pad, ready to go right back up to 25 from there. So this one could turn out to be really well. And they do have options. Again, we got to cater to the option traders as well. If you want to take a longer term position, you could go out to January 2028, and instead of spending $20 for the stock, you could maybe buy some out of the money calls that are trading around $6. I mean, that's going to save you a lot of money, and you're still in on the long side. So there's a lot you could do with that one for sure. Questions from the audience? I love it. We got any comments? We got Nico in there. We got JD in there. Who else we have in there? We got Mike Bennett. Thank you very much.
Yeah. In fact, Mike was asking about the cost of HELOCs, so that where people borrow against their homes. Tim, do you have any color on where that's going and what people are doing?
They're definitely rising, and the good news is when the Fed funds rate went down 1/4 point, it did help HELOCs, home equity lines of credit, and credit cards too. Right, the shorter term stuff that's more variable. We're seeing a huge increase in that. In fact, most of the lenders that I know have risen their maximum amount that they're willing to give on HELOCs. I think here at Synergy One Lending, we just rose our HELOC to a max of $750,000. I think before it was about $500,000. My concern is it's variable. So if we get inflation and people start taking $500,000, $600,000 on this number because they don't want to take a higher long-term interest rate because they have a 2 or a 3 on their major, that's going to work against them and cause a problem. We also, back in 2008, the problem was everybody was using them to buy boats and, motorcycles and all those fun things. And that did not
silver, not silver and gold. Yeah.
No.
Yeah.
Well, listen, you're teeing me up, and I want to cut you guys loose on this. So I want to pull up this chart here. Since you brought up 2008, this gives me highs. But Tim, we're all trying to avoid this. We don't want loose lending to lead to banking collapses, because again, this was where you talked about, butterfly therapists taking out $5 million loans and not paying it back, and that compounded into issues. So I just wanted to ask you just on a couple of factors that make someone a quote unquote good borrower. And then after that, I'd like AJ to kind of do a deep dive into the XLF and maybe some of the bigger banks that are still standing that might have an opportunity for a trade to the upside or downside.
Yeah, I mean, everything's relative. It depends on what they're looking for. People expect me to say, if you've got a large down payment, you're the best. That's not true. We've got people who they're trying to make a difference. Maybe they're struggling to save because prices are expensive. And, most states have down payment assistance programs, and those are built for those types of people who do know how to pay their bills.
Right.
I think what we're really looking for is the consistency on people actually paying them. We don't want to see a lot of Affirm, on credit cards where they're having to buy a pizza on a Friday night, but they have 4 days to pay it off. That's not a good person that should be thinking about carrying a lot of more debt. And and it doesn't have to be about assets either. We're really looking for people who are just going to pay their bills, and our job is to help them build that equity so that they can have the wealth that we're all talking about with, the boomers who have like 48% of all the wealth on the planet or something. So, yeah.
Be nice to your grandparents.
That's
what
right.
I'm going to do, Nod, you mentioned XLF, and then I see Colin in there, Colin Porter, looking for us to talk about Nvidia, which I could do that as well. But with XLF, this is not one that I'd be trading options on, mainly because there's no premium in here. I mean, you've got volatility at roughly 18%. So as an option trader, it's going to be pretty tough to do some spreads on that because you're not able to collect any premium. However, from a long-term buy and protect investor type of a move, you don't have such a bad trend here. I mean, it's in a nice upward trend. Could it pull back and correct? Yeah, I think the whole markets could do that. But for this one, if you're buying it on the dips and you're protecting yourself, remember, it's a buy and protect strategy, not buy and hold strategy. You might be buying it around 53, maybe 52.5, but you're going to be putting your stop somewhere down below these roll reversal areas down here so that you're not going to get yourself in any kind of trouble with a catastrophic hit. So going back to Colin, I'm gonna cut right in because I like chopping it up like this. It's a lot of fun. NVDA, I want to tell you just, Colin, as we were getting ready for this show, a publication went out to our members on Nvidia. Now I can't give you the details, but I can tell you what I'm seeing on the chart. Number one, if you go back and look at the monthly, look at that thing. Looks like a SpaceX rocket where the boosters are coming back to Earth here. You're going straight up. But this is the first month. Let me zoom in a little bit more. This is the first month where we have a slightly lower high, but a significantly lower low. So there's your first pivot point to the downside after 5 months. And so I think it does have some downside potential. I do not expect it to be crashing. But you got to remember, this is the Mac Daddy of mega cap stocks. So even if Nvidia pulls back $50 from here, it's going to have a domino effect on the entire market. And that's why when we look at Nvidia, we tell people keep an eye on that one as more or less a bellwether, but also make sure you're following the 1% rule for managing risk so you don't get hurt if the market does go against you. Now we got about 3 minutes left. What do you have left on your plate there? I know you're chomping at the bit to get the rest of your news out.
I am. We've got 2 more to go. Every interest rates touch everything, touches the dollar, touches commodity. So I'm just going to quickly pull up this chart real quick, which shows kind of a 2.5-year basing of the commodity index. And we got some news today about copper. It used to be the bell of the ball, and now all of a sudden it looks like it's in terrible shape. Do you want to talk about that and some metals, and then maybe we'll close out with a Bitcoin and maybe some news there, AJ?
Yeah, we won't have enough time for I'll do Bitcoin, but I'll have to do this in about 2 minutes because we got to wrap up. Look at FCX at Freeport-McMoRan. Took a big hit because they've had a slide happening at one of their sites here. It's in the news. You could go read about that. But they are talking about how sales are going to drop for them. It doesn't mean that sales are going to drop for copper. It means for them. That's a big, ugly red candle. So this probably has some more downside room to it. Now, I have a target way down here that has not yet been hit in Freeport-McMoRan at 33.45. I would not be surprised at all to see that hit over the next few weeks. Okay, now we'll throw Bitcoin out there. That's /BTC. We've got a bullish candle showing up on Bitcoin right there. It's not completely a bullish engulfing, but that is most definitely a bullish candle with a drop in volume yesterday telling us that the sellers are losing some of that momentum. Now, with that Bitcoin news, I'm gonna tease everyone here. We've got some really big news coming out in StickyTrades where we're bringing on 2 crypto experts who also trade the futures markets, and they're going to be joining us as coaches, as contributors, and they're going to be running their own crypto room. So stay tuned for that. We will be inviting them to our show here in the near term to make the big introduction. But for those crypto traders out there, you've got a lot to be excited about if you're here with us at StickyTrades. So what I'm going to do, Tim, thank you so much for joining us. Thank you so much for the news feed that you give us each and every day. And by the way, for those that want to subscribe to the NODLive feed, all you have to do is go to the link at the bottom of this description box here in the video on the recording, and there'll be a link for you to subscribe for that 2-week trial. So with that, we're going to wrap things up. Thank you so much for joining us. We'll catch you on the next recording. Take care. So long.